Basil Chapman sitting in for Tom O'Brien. This is the Tom O'Brien Show, and I'm one of the hosts Monday through Friday, 11 o'clock till 12. I have the Tiger Technicians Hour. Same number, 877-927-6648. Love to hear from you. And also, I have a service here called the Opening Call. Very comprehensive look at the markets every single day. Many charts, but the major two charts are the Dow chart that I show, which shows the Chapman wave methodology in process as it's moving along every single day. We are counting the peaks and counting the troughs, and we're labeling them. That's as simple the technique is. Let me just actually show you right here how simple it is. This is from my CD introducing the Chapman wave methodology. You can get right here at TFNN. You see a chart right now, and all it shows you are the black lines. What are those black lines implying? Not all that much. There are no candlesticks, nothing. But look what happens if all you do is you put the letters together. And what does it do? It shows you that from the lowest, most obvious low bar, you start counting each successively higher peak. That's how simple it is. Our objective is to get you to at least a peak D. Once you're at peak D, other things can happen. It can also go higher to an E and an F, and that's exactly what happened here. And I'll show it to you as we're moving along through the charts today. Here it is. The Dow today closed up 27 points at 15,498. What I'll do is I'll go through the charts one by one. This is the daily charts, and I'm going to show you the difference between, for instance, when that peak E occurred back in May. Was that May? Let me just double check. Yeah, May the 22nd of 2013. You see that green and red line, those green and red lines there? That's called the MACD, a technical tool I use. And here is the slow stochastic. These are all moving averages. That's really what they are, in different time frames, configured in different ways. Well, when that peak E hit, the market pulled back, the Dow pulled back, and went higher. But what happened is it failed to go to a new high on the 28th of May at 15,521. And you can see that the technicals were failing. And what happened is there was a very sharp decline from 15,542 down to 14,500, 1,000 points. Then what happened is you started a brand new buy mode, the most obvious low bar. That's how we check it out. Technical started to improve, and you went peak A, peak B. There's another pattern I'd spoken to Tom about. It's called, it's just two declining trend lines. I call it the falling axe because it looks like the blade of an axe with the handle over there. And if you break out above it, it can give you an almost one-to-one upside action. Well, it went peak A, B, C, D. At 15,604, you made E and you pull back, and then you spiked a little higher, called a right arm extension, where the technicals are not confirming. And what happened is it went to 15,658 and then pulled back for 1, 2, 3, 4 days. It's been lower than that high, and now we've got to look at many other technical things. So as I stand right now for my subscribers, we've been short. We've been short since about 2 weeks ago, and so far that's sort of working out. But there are certain patterns that I'm looking at. You see that yellow oval pattern? What I had shown my subscribers, this in fact is one of the many charts that I show every day. This Dow chart shows a little pattern right inside there, and it's called the stalk leg, the Chapman wave stalk leg formation. If the Dow closes under 15,405, it almost certainly negates this particular pattern. Today's low was 15,418, got real close. Well, you see the red line here? That's called the 9-period exponential moving average. The price, once it broke above back on, let's take it, yeah, right there, on the 3rd of July, it held that 9-period moving average all the way, and then it started to get a little fuzzy over here where it just dipped underneath it. Now we've got 3 days, consecutive days of closing below it. And this MACD, instead of being the positive support, is now negative, and the slow stochastic is. So I'm very cautious right now. And what happens is you got to look at the different indexes. Let me show you. If you look at the IWM, which is the Russell 2000, the IWM, well, that IWM is one of the weaker indices. The stochastic and MACD are very poor. It too hasn't really broken down. 105.63 was that peak F top. You always have to be careful at an F. That's the 6th highest peak at 105.63. If the IWM next week or by tomorrow or next week starts to go underneath 103, round number 103, got to be real careful. That means that in both cases, there are certain levels. And what I'd say to subscribers this morning is that the level to watch is 15,550, because the Dow has closed so many times right at that level. If it closes decisively above that, you can expect that that pattern that I'm talking about, the stork-leg pattern, can allow for a sudden spike to the upside. We call that. So this entire thing would be one leg. That would be the body. Then you would get the neck, the head, and then the beak comes all the way back down again. Simply put, a break into the 15,560, 70 says, be careful. You can retest the top. You see this trend line right here in the Dow? That trend line is strong. Look how the price got repelled every time it got there. So we're watching that closely. Let me go back to the indices. The S&P, SPX.X. The S&P has made a peak F top as well. It closed just above that 9-period moving average, and the technicals are weak, not as weak as the Dow right now. So if the S&P breaks under 1684, closes under that, it's at 1697, up 6.57, a little stronger than the Dow today. That will be impressive, and say, hey, you can go back and retest those highs. I say to subscribers, this is a very important session today, and it is, and we'll talk about why. Look at the 9-period moving average in the Qs. The Qs are the one, there's no other way I can count it, really. I've got this as peak C, possibly an alternate wave count. The Qs closed at 76.80. This is the Power Shares QQQ Trust Series. Well, from the high today of 76.98, all it needs to do is go 9 cents above that to go to 77.09 to make leg D. Then all the indices are in the same position, saying, be a little careful right now. Let's go to the, I want to go in order. I've made it very simple. If the volatility index, which showed some signs of life yesterday by going all the way to 1391, and traded today 1273, down 25 cents. If that volatility index stays here, it's called buying pressure. Just real simple. In the 12s, 13s, low 13s. The moment it goes to the high 13s, into the 14s, and starts on its way up, starting to make higher highs and higher lows, this market will be coming down. I'll make it real easy. Watch 1391 on the volatility index. I get it by going $ VIX.X. You might have a different way of doing that. That's number one. Number two is, if it remains in this area, that would be buying pressure. It doesn't tell you how high. It just says there's tremendous support right here. Now, I'd spoken about the EUR. Well, let's go to gold, because gold had a very strong move today. But put it into context of the long-term charts. Well, in the daily charts, it's just yawn. It's just nothing. It's $26 at 1311.60, but look what it's done. It's made a cup formation, went to a low of 1179 on the 28th of June. It's tried to rally. It's gone to ABC. Look how important those 4 peaks are. A, B, C, D, doji, the little candle, pulls back from the 1349 area, right down to the low of yesterday of 1271.80, and now it's rallying. What is this channel doing? This channel says, if gold tomorrow, certainly on a now I need to go to the weekly charts. If gold manages to close tomorrow somewhere around the 1316 or higher area, that's going to be very positive, because it'll be the second week out of 3 weeks that is closed above this 9-period moving average, that black line. This is the weekly chart, daily chart, weekly chart, monthly chart. Monthly chart gave a peak F major sell in September of 2011, and it's been going down 2011, and it's been going down ever since, gone all the way. Well, this is the continuous contract, so the prices will be different, but it's all the way from that September high down to the recent low that was in June, and now it's rallying. It's very important, because if the gold contract is able to break, Andy Hector will be talking about this in the next hour. He'll be taking over the Tom O'Brien show for me in the 5 o'clock to 6 o'clock hour. He'll be talking a lot more, but as far as I'm concerned, if gold at any point in the next few weeks goes above 1349 in the continuous contract, in the December contract, let's call that 13, I'll tell you right now, 1350. Goes above 1350. That's very important because then it can target 1436. So we'll come back with all the numbers. Basil Chapman sitting in for Tom O'Brien, 877-927-6648. That's the number to call, and we'll go through different stocks and different sectors when we get back.